So it's August 2nd, Tuesday afternoon. Today we're covering setups that we've had in crude, namely just the one that we've had today. It'll probably take me a good 35, 45 minutes just to cover this one setup as to all the reasons for this. But as we get started, we'll start from the top down using the 240, maybe the daily as well. But what I want to do before we get into it is kind of cover the Fibonacci time extension a little bit and some different ways of looking at fibs. So here you can see I have the Fibonacci time extension here. One of the ways that Robert Prechter would teach you how to use the fibs is not only looking for, so this is our A, B, C move up in crude. All right, there's going to be a relationship between the A wave and the C wave. So what you do is you use the extension. You have the Fibonacci retracement here, and then you have the extension here, and you run the length of A, and then you bring that back to B to find the potential move for C. And you can see that C is exactly almost to the tick on a very large time frame. It's exactly 100% of wave A. All right, I'm using non-back adjusted data. In case yours doesn't line up because you're using merged back adjusted data using ratios for merging the contracts together. So I'm using the pure data of each contract. True prices, what the actual traded prices were for each contract. So another way of using the retracements to find the end of the C wave or the end of the third wave is to actually, rather than anchor the retracement to the end of A, let's say we were something like right in here. All right, we had just started that C wave up. What you can do, let me turn these on. We'll set positive 100 and 0. Is you can bring this up and you can anchor the 61.8 at the end of wave B. All right, so what I've done is rather than anchoring this to the end of wave A and trying to find the expansions, right, above 100 or above 0, sorry, below 100 or above 0 would be considered an expansion of the retracement. Let me just move this over. All right, let me get rid of the extension for a minute so that you're not confused. Okay, above 0, which is negative 272 or negative 618, these are considered expansions. An extension is when you're measuring the length of one wave and then bringing it back to a retracement and comparing this next leg up with the previous leg up. All right, with a retracement, you're looking for expansions using just one wave. Okay, so you're just using the length of wave A and then expanding above. Extension is to use the length of wave A and then bring it back to wave B to find the extension of wave C. So another way to find that extension of wave C is to use the retracement, but rather than anchoring the 0 to the end of wave A, you just bring this 0 on up until you have the 61.8 at the end of the retracement. You see that? So that's another way to use the fib retracement tool to find the potential end of this C wave. All right, and you can do that same exact thing with the time extensions. So you see that? Yeah, it went through it, right? But that's kind of a rough estimate. And where did it come to exactly? It came to exactly 100% of wave A, right here. What is the high price there? The high is 63, 63, 67. 51.67 is the high. And if I get this exact, let's get it exact and see. Not sure I have the exact high or low. I'm afraid I don't. Let's see. The low is at 26.05. 26.05. 26.05. So now we have an extension of 51.71. So we're about 3 ticks off of the high there. The high was 67, 51.67. Yep, 51.67. So we're just a few ticks away from that 100% extension there. And I probably don't have it anchored exactly, but close enough. Okay, 68. All right, so it's 1 tick away from being exact. Isn't that amazing? 1 tick away. So with the time extension, you can do kind of the same thing that I've done with the retracement here, bringing the 61.8 up to the B wave. You can do that with the time extension as well. A lot of people think, oh, this Fibonacci time extension stuff doesn't work. But the main way that it does work is when you add in that 61.8 or 38.2, and then rather than anchoring and looking for exact symmetrical moves between lows and highs, that is rarely going to come in. You know, you're rarely going to see a perfect distribution between lows and highs where, you know, they're exactly 100% apart. Yeah, you do see it occasionally, but it's pretty rare. What you will see more often is when you bring that 100% out. You see I'm dragging it out. This is the 100% line. I've anchored it to the low, and I line up that 61.8 with the major swing high or low. Okay, so I've lined up the 61.8 with the end of wave A, you see, and I'm looking for that 200% or 161.8 to come in with a major swing high. And what do we have on the exact 4-hour bar that we put in that high is where we have the 200% extension. Is that not, it's just eerie almost. It's just bizarre. And then rather than making it up to that channel line right there, we did make it up to the channel line right here. But rather than making it up to the channel line here, we made it up to the exact fib extension of wave A, 1 tick off the mark. So because we reversed off of it here, when you're doing this, when we were doing this in real time, this was actually a throw over. It threw over the top of the channel. But that's when I was using the merged back adjusted data. This merged non-back adjusted data representing the true traded prices of each contract is giving us a little different look and feel to this channel here. But as far as the fib relationships are concerned, I think the non-back adjusted data is definitely the way to go. So we just barely missed the top of that channel there, and that's what we did today on the 2-minute chart, but it goes a little deeper on the 2-minute chart, and I'll show you why when we kind of work our way down. So what we've done, and I've been thinking that this was the end of a correction. I mean, I've been saying that since we started this room back in, when was it? I guess in January, that we were looking for a big correction up and then another wave down, because in the weekly chart, we have, I guess I've already got it kind of mapped out here. We had this big push down, but we need a C wave down to complete this entire move. And it's funny, the guys at Elliott Wave, when we were down here making this low and we were making the rebound, they were consistently saying, okay, we need to go up in a corrective pattern, 3 waves up, and then we need to come down in 5 waves down below 33.50. And at the time, I'm thinking, these guys are just out of their mind. What a bunch of nonsense. But it has exactly happened that way, where we've come down in a set of 5 waves. And this being the first wave down, really beautiful ABC back up for wave 2. And now for wave 3, we've traced out a perfect set of 5 waves with so many perfect Fibonacci relationships that it's almost bizarre. And now we've made a nice A, B, C back up, back into the previous 4th wave, which is typical of your Elliott wave. Just taking that 4th wave out barely right here. So another reason for barely missing that top of the channel there. All right. So now we would expect to come down in 5 waves, and I've kind of got it mapped out here. I think we're coming close to the end of the first wave down here. So we have a 1, 2, we should be putting in 3. I was going to say today, maybe I'd say sometime this week. And then we should have a nice rebound, which is going to make everybody think the low is in, and we're going to go back up. That's going to stop short and then come back down to end the first wave down. And then we'll have a nice, I don't know, 4 or 5 week correction back up, hopefully to about 45 or higher. And then we'll come way down real fast. And we need to break this low or come down below 30, maybe do like a little truncated 5th or something. And then the bull market out of this is going to freak everybody out. That'll probably take the entire 2018 to develop. I'm sorry, 2017. What year is it? So anyway, that's what we're looking for. And because we've come through the bottom of this channel so dramatically with such a steep slope, the possibility of this being a correction back down is looking pretty slim. Pretty slim. I mean, the fact that this traces out in a perfect ABC where C is equal to A is making it much less likely that this could somehow be a 1, 2, 3, 4, 5, whatever, and that this would be a big wave 2 down. For me, it's becoming very unlikely. So we've been talking in the room, expecting this thing to keep coming down with some force to end this 3rd wave down, which still needs another, I would say another push lower. It just depends on how you want to try to count this. I mean, this is all kind of a mess here. The only way that it makes sense to me is that this could somehow be a ABC where the C doesn't quite break back above A, which would signify even more weakness. Anyhow, we've broken through the bottom of this channel pretty dramatically. We're coming down. So to try to find an area on the 240 to get short from is really going to be next to impossible. So what we would like to look for would be an upper median line of some sort. It'd be nice to make it all the way back to a trend line, but because it is so weak, that's highly unlikely. So the best we could look for would be an upper median line. And that's what we had line up today on the hourly, which is the main reason for this short. And that's right here. So that same trend line that I just connected on the 240, I've connected on the hourly. From here to here. And that gave us the upper median line right there. Okay, and it just so happens that the target for this move down, you see how we didn't make it down to the channel right here? Didn't quite make it to the channel. So what we need to do, and this is what you need to pay attention to because this is what I should have done on the 2-minute, is you need to run a sliding parallel from that low. You do that by clicking on that dark purple or the indigo R, and that's going to do a sliding parallel of the channel. And that's what we came down to here and then turn back up off of. And that's because we didn't make it down to the channel here. All right. So if we don't make it down to the channel and then we turn back up, you want to draw a sliding parallel of the channel from that new low there, because that's where demand came in. That's these trend lines and median lines and all that, just think of them as supply and demand lines. Supply and demand is not, the exact low itself. Yes, support can then become resistance here. But mostly supply and demand is a function of previous areas, not the actual area itself. You follow me? That's why we draw trend lines and median lines and channels and all that. So yeah, it should be a habit. We should be drawing these sliding parallels in all the time. All right, so what we came up to today was right here. It was also the midpoint of the week at the time. Right there. Now that we're coming down, midpoint is coming down with it, but right there, the midpoint of the week was right here, which is giving you the 50% correction. Right there. So it was also the 50 of this move. It was also the previous low. So we just traded back up into the previous first wave low. Right? And then on the tick chart, here I have a 30,000 tick. Goodness gracious, come on. So that's a 30,000 tick. Let me just, and I've added in the new filters for the divergence. We're adding in all kinds of stuff now, so I haven't sent out the update yet because we're adding in the rest of the stuff that I wanted to do just so I can completely finish this divergence indicator and not come back to it for, until we go to Ninja 8. So just to make it done, finally. So what we have is potentially a 1, 2, and then however you want to count this, either this is 3 or we're coming up on 3 or this is 3 or whatever. All right, but at the time, we're right here coming up this morning, yeah? So I'm going to look back to wave 2 and connect 2, 3, and 4 together to potentially find, for one, the end of this push down, which might have been the 5th, I don't know, doesn't really matter, and then find the next pullback. So when I connect using the semi-automated stuff that we've developed, you see what's happening here? You need to always pay attention to where the auto line and the lower median line, if you're connecting from high to high, where the auto line, which is the channel line, and the lower median line, where they're connecting. You see how it's not connecting to swing point 3? It's actually connecting to right here. And why is that? Euler. Bueller, because that's the widest point perpendicular to this trend line here, you see? So if I turn off the snap mode and I draw in a line from here to here, that's actually the widest point. And it must be by half a tick wider than swing point 3. And it's got to be by half a tick or less because it looks like we are almost touching right there. So it's got to be less than a tick further perpendicular distance than swing point 3 here. So what I wanted to do was, rather than connect to here, I want to connect a median line to the actual end of wave 3. It doesn't make a whole lot of difference, really. I mean, the median line gave us some support here. It didn't make it quite back down to the bottom of the channel on the tick chart. And it did give us the upper median line here, but you see we went through it quite a bit. Not a ton. Let's see what the price is there, 84. And we came up to, so 6 ticks of a throw over. But when I actually anchor directly to swing 3, it gives me just a bit more precise upper median line for this swing point right here. It's actually to the tick in this case. See? So just a bit more precise there. And let me do a shift, but I think that's going to look kind of crazy with the length of distance between 2 and 3. Let's just see what it looks like. Maybe it gave us the low there. No, it came quite a bit through it. So yeah. All right, so that's an upper median line using the same 2 swing points, but here on a tick chart rather than a minute chart. And then on the 20-minute, I drew this in real time, but I was a little bit iffy about it, which is why I just didn't go in, market 3 contracts. But what I had done previously, looking at this, was draw in from this swing low. So this is where demand really came in and the market moved straight up out of this low, right? If I chose this low, yeah, that's the final low, only by about 2 ticks. But you can see demand came in there, yes, but then it came right back down to test that low, went up, came right back down to test that low. So this was the final test of that area. So that's where I drew this in. And you can see we didn't quite come back to the channel line there. I mean, I could have drawn in a sliding parallel from that swing high. And, well, yeah, okay, we hit that, but, I don't know. So what I did was I actually used the lowest closing price on that 20-minute. And really on the 20-minute, I don't know that that's such a good idea. Normally I use the closing price of a bar if it's on the 5-minute, the hourly, the half hour, or the 240-minute chart. To use a closing price on something like the 20-minute or a 4-minute or something odd like a 16-minute or something like that, the closing price is not something a lot of people are going to be using because it's kind of a different kind of a bar type. Most people would use a 5-minute, an hourly, 4-hour, half hour. So to use the closing price from one of those bars, typically going to give you the better areas. Of course, we can't choose the closing price with the current version of the toolbar. With the next version, you will be able to choose open, high, low, close. You'll actually be able to adjust the auto line. You'll be able to bring it back one or move it around after it's been drawn still being able to access all of those areas within Bloodhound. But here, I just chose that bar, the low of that bar, which is really where price took off from, and then drew it in here, and we came up to the tick, to the auto line there. Now this one I'm not really giving that much weight to because of the way that I've drawn it. It's a little bit, you know, iffy. But when we come down to the 5-minute, you'll see how this comes together. Let's look at the RTH chart. I haven't even really looked at that one yet. Another thing we need to be aware of, and this is the RTH chart. It's a 66-minute, and I'm doing that to show 5 bars per day because it's a 5.5-hour session. 5 times 6 is 300. 330 divided by 5 is 66. So we came up to the upper median line, which is another reason for this being a correction. The relationships between these waves are just uncanny. So the fact that we've got all of these relationships. Now this is the RTH chart, so it may not line up as perfect here. And it doesn't. So it's off a little bit, but this is not showing any highs or lows made pre-market or post-close. But what it does show are some of the areas in the market geometry that you might not be able to see using the full session. And this is definitely a good set. It's just looking back to the left, you have these hits here on the median line. You see, you've got, of course, this. And then you come up and tag it perfectly right there for the end. And now we're coming down to the median line. So this is likely going to give us an area. I must have drawn that in a while back. It's likely going to give us an area for a bounce right here. All right, so be aware of that. It's pretty much right where we're at. I think coming down a little bit more to about low 39s. I just delete that chart. 1 second. Yeah, I think we're coming up on a low here. It's not something I'm interested in trying to trade at all. I think I deleted my 15-minute. Yeah, I did. Oh, well. Nah, there it is right there. All right, so on the 15-minute, you actually do make it to the trend line. Just barely, though. Let's just start over. I'll just draw in a regular trend line from the high. It's not working. To the high there. There we go. You see, you're about a tick and a half, maybe 2 ticks off of it. Let's look at it. It's about maybe 3 ticks. What do you got there? You got 91, and we came up to 94. So yeah, you're 3 ticks from hitting the trend line. On the ETH chart, the full trading session, it doesn't make it back there. It only makes it to the upper median line. Whoops. Let's look from low to low and see if we have anything at all. And yeah, you do. So that was the one thing that I was missing for some reason. And this is what was giving us the area for the previous major short, which if we have any time, we'll come back over, but I don't think we'll have time. So this was the major area right there. All right, and on the RTH chart, if you're looking at this, we made the low the previous day just before the close. All right, so here we had a pretty big gap up. And where did we gap up into but previous RTH prior week low? So that was the low on Friday. Yeah, it was a low on Friday here. And then the high on Friday. And then we gapped down Sunday night, barely. And then here's Monday morning open. Not barely, I mean, it's a pretty good gap. 57. Yeah, it's about a 48 tick gap, or 52 tick gap. And then 48 tick gap. And then here we make it back about a tick off of that auto line in a little A, B, C. So when I was looking at this morning, I was trying to figure out, well, where am I counting this from? Am I counting it from the low here, starting right here, or am I counting it from here? The way that I was thinking about it, I was thinking that this was the end of that previous move actually on the ETH chart rather than this, and it was just slightly truncated. I think it was only 82. Yeah, it was about 3 ticks from making a new low right here. It was actually in line with this prior low, just barely taking that out. So you had a beautiful volume divergence low here. You get this kind of slight move up into the close, the ETH close, and we kind of trickle our way up, breaking this pre-market high, the prior night high, Monday night high, first thing early in the morning, and then we come straight down in 5 waves to end it. So I'm thinking this is a truncated fifth. We just barely take this low out, can't quite make it below this low, and now we're starting the correction. Remember I was talking about that this morning, how this was, that's why I drew this line in. I said none of this is really relating to this as it was developing. Because at the time, I think we were actually about right about here or something. And we were seeing the reversal off of this upper median line, but the fact that we had broken through the channel so quickly and the upper median line so quickly, it was as if this was all kind of a separate section, and this was actually the beginning of the correction and not back here. So in order to measure our ABC, we needed to start from right here and not from back here. So that's what we were looking at, 1, 2, 3, 4, and then 5 just before the open, right there. And then how do we know that's the end of 5 and the end of A? Well, you got a nice little 1, 2, 3, 4, 5 for a double top for the fifth. Okay. And then we come down in a big expanded flat. No, it's not an expanded flat, it's just a flat ABC. Remember I was looking for a fifth wave down here for C. So I was saying, okay, well, we got 1, 2, 3. Now we need 4 and 5, and it failed. Well, it failed right at the open. So that's the opening bar right there. You're trickling up. You don't quite make it above the high. You got almost a double top, 1 tick, and then it comes straight down for 2 minutes at the open, and then straight back up. And then you get your volume divergence high, and that's where Tim started shorting right here. And I'm looking at it, thinking about it, but then wanting to see a pretty clear 5 up to finish that C. And that's what we got finally right there. Let me erase this. So that's where we get our little 1, 2, 3, 4, 5. And now we have a complete A, B, C. All right, I don't want to say that they're not related because pretty much all major pivots are going to be related geometrically somehow. Either you're missing one of the pivots or you're not anchoring it correctly if you're not able to find the major turning points of the day. Not every single one, but the majority of your major turning points are going to align with the market geometry, or at worst, it would be some kind of a news announcement that would cause a major turning point. But oftentimes those are going to coincide with your major areas in the market geometry. So what we had here at the high was, it was a central pivot, which is also the midpoint of the week, being that Friday was both the high, being that looking back at the previous week, I want to say Friday was the high. When was the high made? No, the high was made on, let me figure that out. I'm sorry, it was the current week midpoint, which happened to coincide with the midpoint from Friday, is what it was. Okay. So that's what this high is right here. The central pivot means yesterday's midpoint. The midpoint of yesterday's range, that's what that CP is. PP is obviously the pivot point. Yesterday's high plus low plus close divided by 3, and then yesterday's VWAP is the average price of all the contracts traded the previous day. So what we had here at the high was the warning line of the median line. So if I just draw that in, just the median lines, it's the 100% warning line there. On volume divergence on the 5-minute, looking all the way back to this swing, and then on volume divergence on the 2-minute, looking back to the previous swing high right here, which was the end of the third of C, if we're talking about A, B, C. Okay, so coming back to the larger tick chart, we had another upper median line from different swing points. So using the previous high here, which was the high on Thursday, right after the open, right before the open, and then the high on Friday, Monday, at 1 o'clock in the morning. Oh yeah, that's why we missed that one. Okay, it was at 1 o'clock in the morning. And coming down the upper median line, giving us the high right here. And yeah, we overthrew that by just a little bit, overthrowing it only to run right into the upper median lines on the other charts. On the larger tick chart, looking back a few more swings back, not here, but actually all the way back. Let me draw a trend line from right there on the tick chart. I don't think it quite makes it there, but let's see. Nah. Maybe using swing lows potentially. So after we split it here, it updates and then draws from here. And no, we didn't quite make it back there either, no. Okay. So anyway, we had another hit of an upper median line on very large bearish divergence. And that final up bar at 847, closed at 847, was that very high volume per second right there. See it? On bearish, pretty strong bearish divergence there. And then on the faster tick chart, using a shift median line. So anytime the slope is very steep for the wave A, and you don't have a very deep retracement for B, then you want to use that shift setting, which is here. So we draw it up. I'll use the high here as it makes a double top, and then the low, and it's a little too steep, so we set it to shift, which brings the anchor of the median line to the midpoint here, and it anchors it on the start bar right there. See? That's your shift. And we don't quite make it to the top here, but look at where we do make it to. So we don't quite make it to the top at 0.3 either. And we miss it at 5 by the same amount we missed it at 3. And you actually put in your wave 4 right there. How does it go? Resistance becomes support. And then we initiate the trade up there at the high on that reversal bar on volume divergence. And unfortunately, not according to my plan, tightened up my stop way too fast. And here's where I wanted to explain one of the issues that I had with this trade. So again, talking about where that auto line and upper median line are anchoring, let's just draw the channel, just the channel. So I can draw from this low or I can draw from the higher low. Typically I'll draw from the higher low, but let's just draw from the ultimate low here. You see how we don't quite make it to the top of that channel? That's what I was wanting to short. Yeah, we'd hit all the other areas. We'd already overthrown a little bit on one of the tick charts. But I'm using the faster time frames to fine tune this, right? Because I'm wanting to make it to the area on the faster time frame. That's typically how I'll know by how far we'll overthrow on the larger time frames, by waiting for that area on the faster time frame to be met. So I went ahead and got into one here as it started to turn down on the tick chart, and then put in an order right, I think it was literally 1 or 2 ticks away. Yeah, I think I had one at 89 and then the other one up here at like 92, expecting that it would actually make it and touch this upper median line here. This channel line, which is automatically drawn. But look at where it's drawn from. These prices are the same price. You've got 67 being met here, here, and here. So if I were drawing this one manually, I could choose either the widest point perpendicular to the channel itself, the trend line, and that would be this bar here. Or I could choose the highest price vertical from the baseline. In this case, they're actually all the same price, but this is the last bar that meets that price at 67. So if nothing else, I need to at least draw in a sliding parallel from that high using this R. You click on it, drag it out, click again, and it snaps to the slope. You see I click on it. I can drag it all the way down here and click, and it's going to snap to the slope of that line. In the next version, these will be accessible within Bloodhound. And that's where we come up to right there. Then of course you can take copies of that, paste it, bring it back to that high. Support becomes resistance, blah, blah, blah. Put one here at this low, one here at that low, or right here at this high. See? See what a good slope of that channel it is? And then we break down. Where I was in this, before I got stopped, I was saying how this could likely turn into one of those 200, 300 tick moves because crude is cranking it to the downside. And it actually went about 150 ticks in 4.5 hours. Yeah, missed out on all that. Really could have used that trade. And here you have an extended fifth. Sorry, an extended third. So you got your 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I was actually trying to buy this thinking that this was a potential B wave, that this was just an ABC of the first part of the correction, as if this were an A, B, C of A, and this were somehow a B. But thankfully I took that limit order out before this happened. So then we have a beautiful set of 5 waves down, which could be completing that third wave. And if that's the case, then we should make it back to this high and above, potentially up to the previous, which would be right here, right in there. And that's about 200 ticks away. So on the next correction, the next push back up, I don't know if it's going to develop from here, or we have to go down another couple of waves or what. The next area is low 39. That's only about 40 ticks away. Or no, I'm sorry, we're at 39.77 now. I'm looking at the RTH chart. So yeah, about 65 ticks away, something like that. If we haven't already made the low, and remember, that's a pretty clean set of 5 waves down now with an extended third. So at the moment, it's looking complete. I can't really see very many major areas at this low for a significant low, but it could be one of the intermediate swing points, swing lows, from which we make a nice correction. So we're going to be looking to short this next major correction that develops, which, like I said, could occur from here or down around 39 or so, and then most likely make it back to about right in here. I would say at a minimum, we would need to make it back to upper 40. Potentially break that high. It would be really nice to actually break that high and meet some of the other major areas that we have. What would look great is if we would break out of a downtrend line. That's what we really need to do to kind of reset the structure a little bit. So what I would like to see would be, this is a tick chart, but we would do this on the minute charts as well. I would want to see a break of this line here. I'd like to see us do something like that and potentially break this high as well. So if we break this high, of course, we'll break this downtrend line, and then that will reset kind of the slope of this channel down, and then we'll have a much better potential of putting in a significant low with some pretty major divergence on the 240 or the hourly, and then get a much deeper correction, which we'll try to short up in here as well, probably early next week, maybe late this week. So any questions? I'm going to go ahead and call it a day there, guys. Anybody have any thing to add or whatnot? Not very many people today. Yep, my pleasure. Is that helpful at all? Should we do more sessions like this or what? What is this? You got to be kidding me. When did you make that? That's awesome. Yeah, we'll put that on the front page of the website. All right, you guys. Everybody have a wonderful evening. Talk to you guys in the morning in the trade room. All right. Bye, everyone.